Hi, I'm Kevin Canals with InsureMeKevin.com. I guess it's time to take the mask off. Hi, I'm Kevin Canals with InsureMeKevin.com. And if you are a covered California consumer, you will be receiving two subsidy statements for 2020. One will be for the federal, the 1095A, and the other one is the new FTB 3895. Now, both of these are very similar, but the data that is supplied on those statements goes onto different tax forms, and you do not want to mix them up. So in 2020, California implemented a new subsidy in addition to the federal subsidy. For most people, it is a very modest monthly amount of maybe $20 or $15 a month. For some people, over 400% of the federal poverty level, it could be substantial because there are no federal subsidies over 400% of the federal poverty level. And that's what the new California Premium Subsidy was targeted at. If you read through some of the new literature that's coming out from the California Franchise Tax Board, they refer to this new subsidy as the Premium Assistance Subsidy, or PAS. Covered California refers to it as the California Premium Subsidy, but they're both the same. Now, you will get a statement, two statements. One is a 1095A, and that is for the federal ACA, and it looks very much like the new 3895 from the Franchise Tax Board. Now, Covered California will be sending both of these to you, and they have very similar data on them, but there are some differences because even though the California Premium Subsidy mirrors the state in its execution and conditions very closely, there are some differences, especially on the income ranges. But the big thing is the way the flow of the information happens on your two different tax returns. The 1095A, that data goes into Form 8962, and then the results from 8962 are then populated into your IRS 1040 on your federal tax return. And that is maybe you estimated your income a little bit too high and your final adjusted gross income is lower, therefore your tax credit's a little bit bigger, and that gets reflected on the 1040. Same thing with the 3895, in the sense that that information will be reported into a form called 3849, which will act very much like the 8962 federal document. And the results of Form 3849 will then be put onto your California income tax return 540. But they're different, and you want to make sure you don't get them mixed up. Now, if you're working with a professional tax preparer or one of the online tax preparing software, you're probably not going to have any problems. The main thing is that you have both of them so that you can get the information accurately into your income tax returns. Now, one of the other things that the 3895 tax document does is it shows that you had credible minimum essential coverage. This is important because California now has an individual mandate penalty for not having health insurance in 2020. So for those months that you did not have health insurance, you may have to pay a penalty. For those people who did not have health insurance all year long, they will have to pay a penalty when they file their taxes. The COVID-19 situation this year made things a little bit odd in that there was a special enrollment period for people who did not have health insurance qualifying event. It was the coronavirus emergency. And so they may have had no health insurance for several months in which they will incur a penalty. Then they got into Covered California and they started receiving a subsidy to help lower their health insurance premiums, so they'll get to report that. However, if their income is too low, they may have to pay a penalty, and they may have to pay some of the or all of the California Premium Subsidy back to California, because California did not offer and does not offer any subsidies below 200% of the federal poverty level. But those are things that people will get to work through as they do their taxes. Now, like I said, the reconciliation with these two statements should be fairly easy. In the tax software, you just have to make sure that you're using the right form to put in the right numbers. And so you want to make sure everything is correct, double check all those numbers. You may have to request a correction from Covered California or an additional $38.95 if there were people that you had on your household that are no longer tax dependents, or if you got a divorce, then your spouse needs to have, part of that, the California Premium Assistance statement to rectify and reconciliate on their taxes. And you need to kind of really look at it. Just because you owe some of the subsidy back to California doesn't mean you incorrectly inputted the information. The income ranges for the subsidies and the whole formula for determining how much subsidy a consumer gets based on the second lowest cost silver plan and the consumer responsibility is different between California and the federal government. So California has subsidies between 401 and 600% of the federal poverty level, and the federal government does not. And so there may be situations where some people have to pay back the federal, but they'll get some of the California premium assistance when they do their taxes. But generally, the California premium assistance won't be as generous as the federal because of a different consumer responsibility percentage. I'm going to get into that more on some other videos, but just be aware that it is there. One other issue to be concerned about for self-employed people, there is a issue that the IRS knows about. It's called the circular reference, where when you do your taxes and your income is different than what you estimated in Covered California, and that changes how much you effectively paid for your health insurance. So if your income is higher than what you originally estimated and you have to pay back some of the subsidies, what you paid back is actually paying health insurance, the cost of health insurance, and self-employed people can oftentimes deduct their health insurance premiums, so that is a deduction that lowers their AGI, and which then, as a circular reference, goes back and they have to recalculate that. Now, I haven't dug into it too deeply, but it's possible that if there is a gain or loss of the California Premium Assistance Subsidy, that may also change what a self-employed person gets to deduct on their federal adjusted gross income. And that feeds into the California tax return. So they may have to go back and adjust the federal AGI if their subsidy from California is different. It can get kind of messy. Just really be super conscientious when you're putting in the numbers and think out the different scenarios that might be going on. So the big takeaway, you're going to be getting two statements, the 1095A for the federal and the FTB 3895 for the California income tax return. And if you don't have those, you need to call Covered California. You should be able to get into your Covered California account and download both of those electronic documents. Contact your agent. They have access to your Covered California account and they can download them for you. They cannot do your taxes. I cannot do your taxes. We're not giving tax advice, but we're just trying to put out information to alert you that you will have these two different statements and they must be reconciled on two different income tax returns. Oh joy. So be safe out there as you huddle in your bedroom or at your kitchen table doing your taxes for 2020. Kevin Knaus with InsureMeKevin.com. Take care.